For this session, we will talk about your final tax on certain items of passive income. So if you still remember before, we already discussed the concept of your gross income. And under gross income, there are different items of income incorporated therein. So we said under final tax on passive income, we determine certain items of passive income. So under your gross income, we have the following items of passive income. We have your interest, we have your dividends, we have your royalties, we have your winnings and prizes. We also have your rents and we also have your annuities. All of these are passive income. So these are all passive income under the enumeration of your gross income. However, we said only interest, dividends, royalties, winnings, and prizes are subject to final tax, while rents and annuities are subject to regular income tax. Therefore, whenever we say final tax on certain items of passive income, not all passive income, not all passive income is subject to final tax. Not all passive income is subject to final tax, meaning only certain items such as your interest, dividends, royalties, winnings, and prizes. However, aside from those items, we also tax your informer's tax reward and your fringe benefits. Aside from that, what are the different characteristics of a final withholding tax? So let's look into your final withholding tax and passive income. At the same time, what are the tax rates? So first, the concept of passive income. A passive income is the generation of income does not require any active action or material participation from the taxpayer. So normally, you earn an income without any action or without an exertion of effort. So we call that passive income. However, if we try to compare it with your active income, it arises from active pursuit of business using as basis the primary purpose indicated in your AOI or registration. So if there is no exertion of effort, no exertion of effort, or no active action, we call that one passive income. So let's look into your characteristics of final tax on passive income. So we said your passive income is subject to final withholding tax. And you already know the difference of a creditable withholding tax and a final withholding tax. In a creditable withholding tax, the tax due is not equal to your tax withheld. While in your final withholding tax, the tax due is equal to your tax withheld. Furthermore, creditable withholding tax normally applies to your active income, while final withholding tax applies to certain items subject to final tax. Furthermore, creditable withholding tax should be still presented under RIT or in your income tax return. While your final withholding tax, you don't need to place it in your RIT, meaning do not include in your ITR. And as a rule, both creditable and withholding tax is territorial in application. So what do we mean by territorial in application? So when we say territorial in application, you can only use withholding on income earned within. You can only withhold on income earned within. So for example, if the source is Philippine or domestic source, then we can impose creditable withholding or final withholding. But if in case the income is earned outside, so for example, you have an interest income on a bank in Australia. So Australian bank, may interest income ka, can you subject that to withholding? No, because withholding is only applicable on income earned here within the Philippines. So let's look now into your characteristics of your final withholding tax pursuant to your passive income. So first, income payer withholds the tax. And you already know the concept of an income payer and income payee. We said the income payer, whenever the income payer pays the income payee a certain amount of income, that income payer will now withhold a tax depending on the percentage of the withholding tax. Next, the amount withheld here in your final withholding tax is a final tax. Why is it a final tax again? You don't need to preset it in your regular income tax or in your ITR. And when we say final tax, the tax due is equal to your tax withheld. And lastly, another characteristic of your final tax on passive income is that it applies only to certain passive income. And we already said this a while back. Only on certain passive income, not all passive income. Now, let's look into the general rule on your final withholding. So, for NRFC and NRA and ETB, they are taxed at gross income taxation and global taxation. What do we mean by gross income taxation again? There's no deduction. And global taxation, we said, regardless of income. Why we say regardless of income? Because here, if we compare it to schedular, under schedular, we said you now try to classify the income. Classify the income. But under NRFC and NRA and ATB, we don't classify the income. So let's say, for example, the income is interest. You subject it to tax at 25%. Aside from that, let's say dividends, still 25%, mga ganon, NRA and ETB. Why? Because they are taxed globally. So kahit anong income nila, tax nila globally, 25%. Again, pag sinabi natin global taxation and schedular taxation, the difference lies as to whether you will categorize it or not. So pag sinabi natin global taxation, you don't categorize the income. You always tax it at a certain fixed rate, and that is 25%. How about for gross income taxation? We tax it for the amount without any deduction. So as a rule, take note, NRFC, NRA, and ATB always at 25%. So later, when we go through our discussion, you will see that all income from NRFC and NRA and ETB is always taxed at 25%. Okay? So take note of the characteristics. Again, certain passive income, and it is final tax. And a general characteristic of withholding is that it is territorial in application, that we can only impose withholding on income earned here in the Philippines or earned within. So Philippine sources or domestic sources. If foreign sources, can we impose withholding? No. The answer is no. Okay? Now, let's look into the first item of our passive income. So we have here interest. So for interest, we determine whether it is individual and corporation, or at the same time, we determine the type of deposit. What the type of deposit? So if that is a local currency deposit or a foreign currency deposit. For local currency deposit, we determine whether it is short term or long term. For foreign currency deposit, we determine if ever it is from FCDU or EFCDU, or foreign currency deposit of EFCDU or OBU or FCDU. So from or off. So interest income from FCDUs or OBUs, interest income of FCDUs or EFCDUs. Okay. So for local currency, we determine first if ever it is short term or long term. We determine first if ever it is short term or long term. Sir, question. When is it short term? It is short term if ever it is less than 5 years. It is short term if ever it is less than 5 years. And it is long term if ever more than 5 years. Take note, we are taxing interest here. Sir, what type of interest, by the way? So normally, these are interest income from bank deposits, deposit substitutes, and trust funds. Okay? So interest income from bank deposits, deposit substitutes, and trust fund. Sir, what is a deposit substitute? Normally, a deposit substitute is the obtaining of fund from the public. Obtaining of fund from the public, or when we say public, more than 20 or at least 20 persons. At least 20 persons. If ever you obtain funds for at least 20 persons, not from bank deposits, then we call that one deposit substitute. How about a trust fund? So if ever a fund that is set aside for trust or interest of another, so that is a trust fund. If ever we have an interest income from this one, then it is subject to final tax. How about if not from that? Then it is subject to regular income tax. So sir, kailan din natin irregular income tax yan? So sabi natin, di ba? Bank deposits, deposit substitute, and trust funds lang. So what if hindi nanggaling doon? RIT. Some example is interest income on lending. So nagpautang ka lang, hindi siya interest income sa bank deposit mo, then it is subject to RIT. Interest income on your investment in bonds. So for example, nag-invest ka sa bond, nagkaroon ka ng income dyan, then we call that one um, subject to RIT. Interest income from notes, interest income from notes or promissory notes, it is subject to RIT. Interest that is from penalties. So for example, nagpautang ka, sinabi doon, pag hindi siya nakapagbayad within a certain time, it is now subject to interest. So interest income as a form of penalty is also subject to RIT. Aside from that, itong pinaka-importante if that is an interest income on bank deposit, deposit substitute, or trust funds from foreign sources. From foreign sources, RIT. Tandaan yan, pag foreign source siya, RIT, pero pag ang interest income mo from local sources of bank deposit, deposit substitute, and trust funds, final tax. Katulad ng sample natin kanina, interest income from Australian bank. Interest income from Australian bank. Yung bangko nasa Australia, nagkaroon ka ng interest income sa deposit mo doon. Subject to final tax or RIT? RIT. Why? It is now from foreign sources. Take note, we cannot impose withholding on foreign sources. We can only impose withholding on sources here in the Philippines or domestically. So again, interest income from these items, bank deposits, deposit substitutes, and trust funds are subject to final tax. But if not, it is subject to RIT. Common examples are interest income from lending, interest income from foreign sources, interest income from notes, penalties, etc. Now we go to the final taxation itself. So when can we tax at final tax the local currency and the foreign currency deposited here in the Philippines? So if ever it is foreign local currency, short term, meaning less than 5 years, our rates are 20-20-20, 20-20-20. So 20 for RC, NRC, RA, NRA, ETB, DC, and RFC, 20%. So in short, it follows the general rule that for NRFC and NRA and ETB, it is 25%. So others now at 20%. Why again NRFC and NRA and ETB at 25%? Because they are taxed global taxation, final tax. Global taxation, final tax. So I'll use other color here. You see, it's at 25%. Now, we go back. So for short term, RC and RC, RA and RA, ETB, DC, and RFC at 20%. Now, how about for long term, more than 5 years? RC, so local currency, short term, long term. Short term, general rule for NRFC, NRA, and ETB at 25%. So for others now, at 20%. How about long term? For long term, you go back again to your general rule that if ever it is NRFC, NRA, and ETB, 25%. For individuals, not NRFC, okay? Not NRA and ETB, by the way. NRA and ETB, it is considered exempt. But for corporation, not NRFC, it is now subject to RIT. So let's look at this. RC, NRC, RA, NRA, ETB, exempt. While for corporation, not NRFC, that is domestic corporation and resident foreign corporation, RIT. Now, if you try to look at this, there is an asterisk here. What is this asterisk? This asterisk talks about your pretermination rule. So as a rule, if ever it is at least 5 years or more than 5 years, it is long term. It is long term. And if that is long term, then it is exempt. However, if it is pre-terminated, let's say less than 3 years, you will be subject to 20%. 3 to 4 years, 12%. 4 to 5 years, 5%. So let's say, for example, you have a deposit in a bank, deposit, time deposit, 7 years. Let's say 1 million, yield is 10%. Deposit, time deposit, 7 years, 1 million, 10%. Okay. So it is 7 years, right? Therefore, the interest income here, 1 million times 10%, that is 100K, is considered exempt. Why? It is long term. It is long term. But what if you terminated it after 3.5 years? What if you terminated it after 3.5 years? We said here that if there is a pre-termination and the pre-termination is in between 3 to 4 years, you subject it to tax at 12%. So we get the total interest income for 3.5 years. That is 1 million times 10% times 3.5 years. So we have here 350,000. That is the total interest income for the 3.5-year period. You multiply it now to our tax rate of 12%, then our total tax is equal to 42,000. So the tax due now is 42,000. Look at this. Initially, it is exempt, right? However, during the term of the deposit, you preterminated it. So since you preterminated it, it is subject to your pretermination rule. And what is that pretermination rule? If less than 3 years, 20%, 3 to 4 years, 12%, 4 to 5 years, 5%. So sir, how about if ever I have a time deposit again? Time deposit. 7 years yan, halimbawa. And then pre-terminated it at the end of 6 years. At the end of 6 years, question, is it considered taxable or is still exempt? So sabi natin, ang long term natin 5 years, tama? Lumagpas ba yan ng 5 taon kung terminate mo siya after 6 years? Yes, lumagpas siya. Kaya ang tamang sagot dyan ay it is exempt. It is exempt. How about if ever you have a time deposit of 7 years? 7 years. Binenta mo siya after 3 years. Sold after 3 years. Sold after 3 years. Question, is it considered taxable or exempt? 3 years na lang yan, di ba? Kung 3 years, ibig sabihin, is it long term or short term? Long term or short term, it is now considered as short term. So if short term yan, sold after 3 years, question, taxable or exempt? Taxable or exempt? Our answer there is, it is now considered taxable. So long as you pre-terminate it, so long as you pre-terminate it, guys, pre-terminate it, na naging short term siya, then taxable na. Pero kung pre-terminate mo siya, long term pa din siya, edi exempt. Okay? Tandaan yung rule natin doon, pre-termination, pre-termination. So under pre-termination it, if terminated is still long term, it is exempt. If terminated, it now becomes short term, then it becomes taxable. What is the rate? 20, 12, or 5%. 20%, 12%, or 5%. Okay, that is for local currency deposits. So again, for local currency, just determine whether it is short term or long term. For short term, NRFC, NRA, and ETB is still 25%. Long term, NRFC, NRA, and ETB is still at 25%. How about others? Then 20%. Pag long term naman, individuals, not NRA and ETB, it is exempt. While for corporation, not NRFC, it is RIT. So we're done with local currency. We're done with local currency. Now let's go to your foreign currency deposit. Now for foreign currency deposit, by the way, what's the difference between FCDU and EFCDU? So these are foreign currency depository units. Foreign currency depository units. Pag FCDU lang yan, they can only give short-term foreign currency transactions. But EFCDU, they can both have short-term and long-term foreign currency transactions. So dito, titignan lang ninyo yung type ng transaction na pwedeng i-offer ng ating FCDU or EFCDU. Pag purely short-term foreign currency deposit units yan, FCDU siya. Pag may short-term and long-term siya, EFCDU yan. But for foreign currency deposit, ang titignan ninyo if ever it is interest income from EFCDU or FCDU or interest income of EFCDU or FCDU. So let's say you have an interest income from EFCDU. It is subject to 15% for residents and exempt for non-residents. Okay? 15% for residents. Residents, lagay natin dito. 15%. Pag non-resident, exempt. Ayan 15% resident citizen, resident alien, domestic, and resident foreign corporation. Pero, pagka hindi siya resident, meaning non-resident siya, non-resident citizen, NRA-ETB, NRA-NETB, and NRFC, exempt siya. How about if interest income of EFCDU or FCDU sa residents, 10% siya. Pag non-resident, then it is considered exempt. Then it is considered exempt. Okay. So, ang titignan nyo lang dito, if ever, it is a local currency or a foreign currency deposit. Local currency or foreign currency deposit. Okay, let's have an example here. Let's have an example. So, interest income from BPI, short term, 100,000. Okay? This is gross at gross. Interest income from PNB, another short term, 1 million. Interest income from BDO, this is long term, 500,000. And then interest income from, let's say, East West Bank, then this is 2 million. The asterisk means that that is a translated amount. Okay, translated amount. So, first determine if ever it is local currency or foreign currency. BPI, local currency. PNB, local currency. BDO, local currency. For East West Bank, it is a translated amount, meaning it is a foreign currency. So for local currency, just determine whether it is short-term or long-term first. So here, for BPI and PNB, it is short-term. PNB and BPI short-term, while for BDO long-term. We said for BDO that will be exempt because it is long-term. Short-term, it is now taxable. So assuming it is a resident citizen, the tax here is 20%. So 20%, 20%, this one is exempt. How about from East West Bank? Since it is a foreign currency, so this is an interest income from the FCDU, then it is subject to 15% tax rate. So the tax due will be 20K, 200,000, and 300,000, total of 520,000. So again, for interest income, this is what you will do. First, determine whether local currency or foreign currency so that you can properly tax it. Katulad ng ginawa natin, dinetermine muna natin kung LC or FC. So once na-determine mo ng LC siya or local currency siya, determine if short-term or long-term. Pag short-term, taxable siya normally at 20% in the exception of NRFC and NRA and ATB. Pag long-term siya, it is exempt. But take note, the exception here is subject to pre-termination rule. Okay? Pre-termination rule. Now, once natapos mo na yung local currency, ang next naman ng step mo, tingnan mo yung mga foreign currency. Yung foreign currency, depende kung from or off. So dito, you assume it is from, kasi nga from naman sinabi dyan, so ang gagamitin natin ay 15%. Okay? Final thing that we will learn on your interest. If ever it is said gross, gross interest income, you just get the interest income, you multiply to the rate. But if ever that is net interest income, so the net interest income, you gross it up to 100% less the rate multiplied by the rate. Okay? Interest income. Pag net interest income yan, then you get the net interest income, you divide it to 100% less the rate, multiply it to the rate. Okay, let's say for example here, you have a net interest income amounting to 80,000 on a local currency short term. You have net interest income of 80,000 local currency short term. How much is the final withholding tax? So to get that, you get 80,000 divide by 100% less the rate of 20% because 20% is the rate for local currency short term. You multiply now to the final tax of 20%, then our tax due is 20,000 pesos. Okay? So ingatan nyo lang, pag yung problem binigyan kayo ng gross interest, i-multiply nyo lang directly sa rate. Pero pag binigay sa inyo ay net interest income, ibig sabihin nabawas na yan dati. Nabawas na po dati yung ating final tax. Kung nabawas na dati yung ating final tax, then ang gawin nyo, i-gross up nyo to get for our tax due. Okay? That's for interest income. Again, for interest income, first, determine if local or foreign currency. Next, for local currency, tax it whether short-term or long-term. For foreign currency, tax it whether it is from or off. Now, for the tax base, just be careful whether it is gross or net interest income. And take note if the problem tells you that it is already translated. In short, it means that it comes from or it came from a foreign currency depository unit. Okay? So pag foreign currency siya, tignan nyo lang kung from or off. Now let's go to your dividends. So for dividends, these are normally distribution made by corporation for earnings payable to your shareholders. This can be in money or a property. So pwedeng cash dividend yan, pwedeng property dividend yan. Pwedeng cash dividend yan or property dividend yan. But take note, this should be a dividend out of earning. Dividend out of earnings. So, galing sa earnings natin, kaya nagkaroon tayo ng dividend. Sir, what if the dividend now is out of the capital? Dividend is out of the capital. Pag dividend out of capital yan, ang tawag natin ay liquidating dividends. Pag liquidating dividends yan, liquidating dividends is subject to RIT. Liquidating dividends is subject to RIT under your capital gains or losses. Again, liquidating dividends, RIT, cash and property dividends or dividends out of earnings subject to final tax. O ingatan nyo rin yan. Tignan nyo muna yung dividend. Hindi lahat ng dividend taxable under final tax. Tignan nyo kung cash or property dividend or liquidating dividend. So cash property dividend, final tax, liquidating dividends, RIT. Now, let's go now to our dividends itself. So in short, cash or property dividend. So if that is a cash or property dividend income, you determine who declared the dividend income. So who declared the dividend income. So if the dividend income came from a domestic corporation or a foreign corporation. So again, if that is domestic corporation or from domestic corporation, we can subject this one to final tax. Why? Because we said we can have withholding only on domestic or Philippine sources. But for foreign, we subject that to RIT. Why? There can be no withholding on foreign sources. Kaya pansinin nyo, pag yung dividend nang galing sa foreign corporation, RIT siya normally. Kasi nga, we cannot really impose withholding on them. That's why final taxes only applies on the following domestic corporations. And as a rule again, general rule, pag NRFC ang naka-receive or NRA and ETB ang naka-receive, ang tax nila ay 25%. Bago dito is NRA ETB, it is at 20%. Pagka naman individuals, other than NETB and ETB, 10%. Pag corporations, other than NRFC, it is exempt. Okay? So now, intra-corporate dividends is considered exempt. Intra-corporate dividends are exempt. So, if ever from domestic corporation to resident foreign corporation, then exempt. From domestic corporation to another domestic corporation, exempt. From domestic corporation to resident alien, 10%, NRC 10%, RC 10%, NRA and ETB 20, NRA and ETB 25. Notice again this rule that global taxation of NRA and ETB and NRFC, regardless whether it comes from domestic or foreign corporation, is still subject at 25%. So what's new here? What's new here is the uh, dividend on your corporation or intra-corporate dividends. Tandaan na, they are considered exempt dividends. Exempt dividends, inter-corporate dividends. Sir, by the way, sir, ang nasabi nyo lang kasi ay cash dividend, property dividend, at saka liquidating dividend. Paano naman pagka stock dividend? Okay? Stock dividend. Pag stock dividend, normally, there's no ability to pay yet. Why is there no ability to pay? Kasi nga, it is not yet realized. It is not yet realized. So since it is not realized, then normally we don't subject it yet to tax. We don't subject it to tax, especially if ever that stock dividend is subject to cancellation and redemption. So we don't really tax it yet. Now we go to your taxes paying rule. So if you will look at this one, there's a double asterisk here in your NRFC. So under NRFC, we have the concept of tax is paying rule. So what is that tax is paying rule? So if ever there is an intercorporate dividends paid to NRFC, it is subject to 15% preferential tax. But it will only apply if there is no effective tax treaty with the Philippines and has a worldwide system of taxation and allows a tax credit against the tax due from NRFC dividend taxes deemed to have been paid in the Philippines equivalent to 15%. Normally, guys, for a tax sparing rule to apply, if ever the foreign entity or the foreign country does not tax the dividends, then it is considered as also spared at a lower rate. So, hindi nag-tax yung foreign entity natin, hindi nag-tax yung foreign entity natin. So, ang ginagawa natin, bibigyan natin sila ng mas mababang rate. Bibigyan natin sila ng mas mababang rate. So, ang rate niyan ay 15%. 15%. We call that your tax sparing rule. Tax sparing rule. Next item of final tax, we have your royalties. So from royalties, for royalties, you need to determine whether it comes from passive royalties or active royalties. Kasi nga, sabi natin, only passive income is subject to final tax. So pagka passive royalty yan, then final tax. Pero if ever it is an active royalty, then RIT. Kaya pansinin nyo dito, active royalties, RIT siya. Pero lagi niyong tandaan na to pagka NRA and ETB at saka NRFC, laging 25% yan. So magbabago lang yung rates ng other royalties. So now let's look into your other royalties. If that is from your cinema films and similar works, 20% yan. Pag books, literary, and musical compositions, that is considered taxable at 10%. It is considered taxable at 10%. How about if ever it is a corporation? For corporation, 20%, 20%. And then, for other passive royalties, it is 20%, 20%. Ang ingatan nyo lang dito, pag passive royalties, as a general rule, 20%. Exception, for NRA-ETB na cinema and other similar works, 25%. Books, literary, 10% for individuals, while 20% for corporations. Okay, ulitin natin. Pag passive royalties, as a rule, 20% siya. So, pansinin nyo, 20, 20, 20, 20, 20, 20, 20, 20, 20, 20, 20. Ano lang yung iiba dyan? Ano lang naiiba? Itong 25% at mga 10%. So, if ever, NRA-ETB na similar and other similar works, 25% siya. Pag books literary from individuals or income of individuals, 10%. Pag income ng corporation, 20%. Okay? So, yun lang yung ingatan nyo dito kung anong type ng royalty. Active, RIT, passive, final tax. Anong rate? Passive royalties as a rule, 20%. For cinemas and other similar works, 25%. Books literary, 10% for individuals and 20% for corporations. Next, we have your prices. For prices, you look into the amount of the price. Amount of the price. So if it is 10,000 and below or above 10,000. If that is 10,000 and below, RITN. But above 10,000, 20%. In exception for your corporation. For corporation, it is RIT. It is RIT. So dito, pansinin nyo, RIT. At uulitin ko na naman, NRA and ETB, NRFC always at 25%. 25%. Okay, that's for prices. Next, for winnings. For winnings, if the PCSO winnings is less than or equal to 10,000, it is exempt. But if the PCSO winnings is more than 10,000, it is now taxable at 20%. Other winnings, 20%. So as a rule, winnings, 20%. What is the exception? For PCSO winnings, less than or equal to 10,000, it is considered exempt. And for corporate winnings, it is subject to regular income tax. Corporate winnings subject to regular income tax. And as a rule again, NRA and ETB and NRFC at 25%. NRA and ETB, NRFC 25%. Next, informer tax reward. Okay, last for this one is informer tax reward. So for informer tax reward, um, generally it is 10%. Generally 10%. But look at this. NRA and ETB and RFC still at 25%. Now let's look into the amount of the reward. The amount of the reward is the lower of 10% of the amount imposed and collected or 1 million. So for example, ang total collection mo ay 1 billion. Ang total collection mo 1 billion. So ang limit ng ating reward ay 10% of that amount or 1 million pesos. Okay. So if that is 1 billion, then 10% of 1 billion is 100 million. Lower between 100 million and 1 million is 1 million. So what we will tax is 1 million. And what is the tax? 10%. The tax is 10%. Another example, what was collected by the BIR is, let's say, 8 million. Collected by the BIR, 8 million. So the limit, 10% or 1 million, whichever is lower. So this is 800,000. This is 1 million. Lower is 800,000. Less final tax of 10%. Assuming RC, NRC, RA, NRA, ETB, DC, and RFC. Pero kung NRA and ETB yan at NRFC, edi 25% yan. So imagine if you will inform the BIR about a possible tax due by a corporation or any taxpayer, it is still subject to a limit, 10% or 1 million. At the same time, it is subject to a final tax of 10%. So nireklamo mo na nga, for sure, kapalit niyan buhay mo. Di ba nireklamo mo, kapalit nun buhay mo. So ang amount lang pala ng buhay mo ay 10% or 1 million subject pa sa final tax. Joke lang, hindi naman normally siguro papatayin. But of course, there's a risk that you might die in the process of informing the BIR. And you have other requirements. And what are those requirements? First requirement is that the informer must not be BIR employee or official. Why? Because it is part of their duties or responsibilities for the proper collection of taxes. Next, public official or employee. You must not be a public official or employee again because you want that the government will have enough funds. Next, you must be not a relative within 6 degree of consanguinity of BIR employee or officer or a public official or employee. O, di ba? Nagreklamo ka na nga, ang hirap-hirap pang makakuha ng reward. 6 degree of consanguinity. So, take note of the items subject to final tax. We have your interest. We have your dividends. We have your prizes. We have your winnings. And lastly, your informer tax rewards. We also have your royalties, by the way. Royalties. Okay. So for interest, again, determine whether long-term or short-term. For local currency. For foreign currency, determine if from or off. For dividends, determine if ever from domestic corporation or foreign corporation. If coming from domestic corporation, can be subjected to final tax. From foreign corporation, no final tax, generally RIT. For royalties, determine if ever passive or active. If ever passive, subject to final tax. Active, subject to regular income tax. For prizes, determine if ever within the 10K limit or more than the 10K limit. For winnings, determine if ever it is a PCSO winnings or other winnings. For informer tax reward, always subject this to 10% final tax. but determine, of course, if ever the informer is applicable to get the reward or not. Kung walang reward, edi walang final tax. Kung may reward, edi may final tax. So that's it for this session on passive income.